Are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I am Dollar Will, just a regular Joe trying to make it. Let me set up my chart here for you and get into this. The short of it is it doesn't look good. Let's see, the last video I posted was last like midnight, not just past midnight, midnight going into Thursday morning. And as you recall, the market took a pretty nasty dive in the last like 5 minutes or whatever before the market closed or something like that, and it just took a nasty dive. Well, if you look back, let's go back here. I think now I'm gonna look at a 15-minute view. Let's look at a 15-minute view. Let's see, and get my bearings. So every candle is a 15-minute view, and this is what happened. Let's see, this peak here was let's see, getting my stuff together on my screen here. That's the thing about trading. You end up with a million daggone tabs open. You tax the hell out of a computer, and it's real messy. So I see that's why those traders need a whole lot of computers. Got stuff everywhere. Okay. This on the second, of course, this is a 15-minute view, so it shows this last candle was at 345. So right when the market closed, this happened. Bam. And this is one 15-minute candle. And this low here represents from 11:15. So it was the low of the day. And then the high of the day happened in the last 15 minutes of the session, and right after the market closed in the futures aftermarket, it took out most of the day's gain in 15 minutes. Just gone. Well, let's see what happened yesterday. What happened? The market got jokes, okay? The market got a sense of humor. So it bled all day, and then look at the bottom, it shows the time. In the last 15 minutes of the session, it took off. It's got jokes, okay? Now, yesterday, I thought that there was a good chance that we could revisit this top to give people a chance to get out of the market. They help the hodlers consume some YouTube videos and maybe rethink it. But nope, this bear is brutal. It just doesn't care. So you had no real chance. So the market opened. Let me find 9:30. Let's say here. So this was the open yesterday. And all you got was this move, which did not take out any high. So in technical analysis, is a very basic rule. That rule is downtrends make lower highs and lower lows. So and the downtrend lasts for as long as the price keeps making lower lows. It just is what it is. And we're talking about the big moves. You got to see that just swings. Now on a daily chart, all these would be one candle, 4 hour. You can go to bigger time frames. It gets easier to read. But I just wanted to go to this granular level to make the point that a lot of stuff is happening like right in the last 15 minutes of the day, and then when the market closes. So it's all this stuff happening. So we got a nice little rise here since 9 o'clock. But unless it goes higher than here, that that you're not out of the woods. It would be great if it did come back up to say here. I don't think there's a chance. No, not a good chance it's going to take this out. It would be great. It would give people an opportunity now to get out and recover some of this loss. But is that likely to happen? Hell no. This bear don't care. Okay, bear don't care. It's here to take your money. All right. And a little bit about market psychology. I'll let y'all in on, and that everybody has heard FOMO, fear of missing out. Um, so that's on the greed end of the scale. When prices are rising, I mean, Friday is a very important day with regard to market sentiment because the way the price trades, whether the price is positive or negative, or meaning up or down on a Friday, says a lot about sentiment in the market. In markets that are optimistic, where the marketplace is optimistic about stocks, the price is up, trades higher. Friday is a positive day. At the end of the day, it's a positive day, meaning that Friday is the 4 p.m. price is higher than the 9:30 price. Okay, and because in those that's what happens generally in uptrends because of fear of missing out on a big gain on Monday. There's a fear that the market may open at a higher price uh, that you didn't get a chance to participate in. So people trade into the market and keep their money in the market over the weekend because they're driven by greed, fear of missing out. Well, in bear markets, the reverse of that is true. Okay, so um, if if people keep their money, if in bear markets people are afraid that the Monday might open lower than the close on Friday. And so they're fearful and they don't trust leaving their money in there over the weekend. Let me be more specific when I say people. I'm talking about traders. Um, those of you FOMO folks and you fundamental folks, y'all gotta realize. I mean, y'all gotta stop saying dumb stuff. Okay, it's a lot of different people in this market with lots of different motivations, and everybody's right. Everybody's makes money. Okay, the way that you see things is not the you fundamental traders, you FOMO, dollar cost averaging, buy and hold forever people. Um, Fine, do what you do, but don't sell or mislead people into thinking that everybody or that even most people think that way or trade that way. It's not true, and you can see it on the charts. It's big money moving in and out of this market all the time, just like in the forex world. You got the central banks of the world trading in and out of the market every time. They are trading, trading, trading. They are not investing, they are trading. The reason why prices move up and down is because big money coming in and out of it every day. Because a small move, an average move, it's common for price to move at least 1% a day. That's quite common. If you're controlling $100,000 worth of money, either liquid or through margin trading or you know using leverage. These terms are different, but it all means using other people's money. If you're controlling $100,000, you can capture a 1% move a day. That's $1,000 a day. That, in a nutshell, is the objective of traders, and that's a significant amount of money. But what if you're controlling $1 million? Well, then then 1% a day is $100,000. So now you can begin to see the greed, the incentive to trade. And the markets are for traders, not for investors. Okay, people are buying and selling every day, taking advantage of a price being, uh, let's say, um, rising too far above the mean and falling too far below the mean. That trading that those that the price action above and below the mean, uh, the trading the tendency for prices to revert to the mean, whether they traded far above the mean or far below the mean. But there's this dance that price does around an average, around a mean, uh, throughout the day, throughout the week, throughout the month, quarter, year, and in every time frame. And there are traders trading these different time frames to try to get that 1% or some fraction of it. And that's the liquidity in the market that's present that allows you to step in and buy and sell whenever you want. So the traders and speculators are essential to having a market, because if everybody bought and never sold, then there wouldn't be much action in the price moving around. So the price is moving around because of quote speculators in there every day, um, taking advantage of these prices moving up and down below a mean. So if you took a line and you put it down the center of this, you see what I'm talking about, how it rises above it and falls below it. You just put an imaginary, what you would think is the center. I don't want to mess this up. I could put a 50% line and you'll see the price dance above and below it. That's a trade, you know? And there are people making that kind of money once you get good at it. They could do that in an hour or two. So rather than go to work all day, they'd rather make $1,000 a day trying to do that. Now I'm not trying to make it sound easy. It can take years to learn that. Okay. And you typically will lose a good deal of money on the path to trying to learn it. All right. And what I do on my Patreon is try to mitigate that. But anyway, back to these charts. I know enough ranting about everybody getting in their own little tunnel vision and thinking that everybody has their mindset. But anyway, so we'll watch this pattern here. I doubt if it breaks out of this channel. That's what I'm looking to see, if it does or does not. So far, it looks like we have a confirmed channel. So if the price dies and continues going, then it ain't good. it ain't good. Let me just get to the quick on this. So we got a break. This was in Elliott wave terms, we call this the A wave, the B wave, the C wave continues further. And just to give you some big picture, come on, my computer is. I need to close some of these tabs. This is the yellow bar here. This is where I'm looking for the downtrend to end in this area. It's not an exact line, it's an area. Okay. So, but between now and then, we're in a channel. And I think we're pretty much, this is a daily chart. I think we're going to pretty much trade in a channel until meaning not break above this, just kind of zigzag our way down, go lower than this. Maybe get a pause somewhere here, a fake out move. Maybe we'll come up a little bit and then finish it off. But this thing looks like it's going to be ugly probably through the last week of this month. This thing could be over by the end of the month. Okay. Now, the tendency of prices fall faster than they rise. So time is kind of, our concept of time is kind of distorted when we interact with the markets, because we think that, well, it's only been falling for 3 weeks, or something like that, or it's only been falling for a month or two. Well, 2 or 3, 1 or 2 weeks, or 2 or 3 weeks, or 1 or 2 months can do a tremendous amount of damage. If we come down to this area, we could be in a situation where we're approaching the 1st of March of 2022, be at the same price level that we were in March of 2021. And that damage will have happened since the first of the year. So in 2 months, it looks like we're on schedule to have 2 months, or less than 2 months, take out 9 months from, I'm saying, from March to the end of the year. So it doesn't take long to do a lot of damage. So that just puts hodling in perspective, okay? All right. And then you got to do all that work to get all the way back here. So that's the benefit of learning technical analysis. But this move was showing the peak. I'm gonna peek at the let's peek at the monthly chart real quick. Okay, so this is the entire move since 1971. And I'm not going to get too much into these oscillators, but these are momentum oscillators. I go into it deeper on my Patreon. This is a MACD. This is a stochastic. So you can, you can, a third grader could see that, hey, this is high. All right. There's been a lot of momentum over the time, and it's due for some type of pullback. And this whole chart just looks, this is your life. this is your life. If your family participated in this trade, you're pretty happy. If you have money issues and you didn't participate in this trade, that's why. That's why you have money issues. All right. This is the face of capitalism. Okay. If you participated, you're smiling because capitalism is working for you. If you're having money issues and you did not participate in capitalism, this chart is why. Okay. You have to change your relationship to capitalism. Trading in stocks is essential part of capitalism. Period. End of story. They could have told you that in school, but they didn't, because this country needs a labor class. It's all about exploiting labor, and they can't tell you the truth. And because if they did, then you wouldn't remain part of the exploited class. You'd be trying to get out of it. Somebody got to work for the minimum wage, so you can't tell everybody the truth. Too much red pill. Too black, too strong. Anyway, so let me see. That's the monthly. So obviously we can see that this thing is due for some type of correction in momentum. These are momentum oscillators. So it's time for the buying to kind of cease and people to take some profit. So the only question here is how low are we talking? Right now, until the price does something otherwise, I'm of the view that we're going to come down to this area and go to a higher high. And then once that happens, my tone will change. You will hear fear porn from me. Fear porn saying that this whole thing could be under attack. But more immediately, this from 2009, but actually much more. But this would be a pause where we could get a rise. But first things first, let's survive this, and I'll watch the charts to see if my my thesis is going to hold that the price is going to bounce here. I'm going to continue this historic bull run to new highs to take us through the year 2023 to end 2023 on a positive and maybe into 2024. I'm sorry, in 2022 on a positive and maybe into year 2023. And then we'll somewhere in there, maybe we will be dealing with the fear porn stuff. Um, but that's the monthly view of things. And just looking at the weekly real quick, uh, momentum kind of helps us here. I'm looking at this part, but let me trying to get the scaling right so you can see. So looking down here at the bottom, this is like April. So momentum has been waning for a while. So, and that's normal. Momentum can trade opposite price for a long time. We call that divergence. It can happen for a long time, but eventually price does follow momentum. Okay. And so that's what we're doing right now. The price is fighting for a level where the traders see value in it because it's been traded up pretty high, pretty long, and it's time to take profits. And so I'm thinking maybe around in this level, but we'll see. We will see. So let me check and see who's riding with your boy. Back to that market psychology thing. Here's a short one to put in your mind. In bear markets, the week ends negative. If there is a little pullback, typically it'll be in the beginning of the week. And in bull markets, it's flipped. In bull markets, the beginning of the week is where you'll see the weakness, and then the end of the week, closer to Friday, is where you'll see the strength. So that's just the personality of a trend, how it happens, how it unfolds. So this is the channel I was talking about, and we seem to be committed to it. Seem to be pretty committed to it. Let me look at the 2 hour real quick. We got a doji candle right there. That's the 4 hour. That means indecision. Yeah, get on that Patreon, y'all. Get that game. Game. So yeah, so even the fact that we have an indecision right here does not bode well for the price making a higher high. So hey, we got a channel. We got a committed down move of lower highs and lower lows. So the pain continues. Okay. What's up, Gold Professor? Yeah, man, I'm a Gold Professor. Be careful, man. Use a stop loss, brother. Okay. I'm going to be shifting soon to talk about the dollar. Gold has been holding in a very long sideways channel. Now, the problem with that is when the floor breaks, or if the floor breaks, it falls fast when you see when a long channel has formed. Whether it breaks to the upside or the downside, the move is huge. And so with the dollar showing strength and gold typically moving inverse to the dollar, I'd be careful with that. So definitely use a stop loss. What's happening, brother Iori? I'm gonna be stalking you, bro. You gotta get your trades in. I'll leave it at that. You know what I'm talking about. You're gonna have to check in with me today. All right, check your inbox. All right. What's happening, Raining Woman? What's happening? Long time. I was thinking about you. I went by your channel, like, when is she gonna post something? You know, I mean, I don't like it when the good people on YouTube just go away and you don't hear from them. You know, we gotta sometimes, you know, you gotta come check in. You know, I do that sometimes. I go to people's channel sometimes and I just poke them and say, "Where you been? You know, you all right? You know, because you know these are some tough times. You gotta check in with people. You know." You know what's happening, Raggy Menagerie. I hope I said that correctly. And but that's all I got. And but you're gonna hear some more from me. Um, I'm gonna take a look and see what look for some good news. Okay, I'm gonna try to come back with a video to find some good news to talk about, just to make the point that the stock market contains sectors and industries, and they don't all move exactly together. But the nature of news media is to talk about how they say, if it bleeds, it leads. You know, um, and what's the other saying? Um, Dog bites man is not news. Man bites dog is news. So news is a freak show, and I spent most of my life working in news, y'all. So I know the thought process. All right. So it's news is a distortion of reality. You know, you'd be surprised. It's a lot of us that work in it don't even watch most of it because you really will lose sense of reality. You know, you'll think everything is bad all the time, everywhere, and it's not. You know, so I'm gonna try to show what's winning, to show what can be learned from having a broader view and not relying on the news, and to look at it from a technical perspective where you take control and use information that's publicly available. You know, it's just not popular or profitable um, to talk, good news while the market is falling. I mean, I understand why it's necessary to focus people on the bear market, but um, perspective is needed. So I'm gonna comb the markets today to find um, glimmer of hope. One, what's working right now. Two, what's a setup. What's setting up to work for an extended period. And there's some candidates. So I got some work to do. All right, y'all. All right, Rainy Woman. I'll be checking that for that email. All right, peace, everybody. I'm out.